Big U.S. banks such as J.P. Morgan, Citigroup reported profit surprises in the first quarter despite the banking turmoil seen in March. But will the regional banks offer up a similar tone? Here to discuss is Stephen Biggar, Argus Research Director of Financial Services Research. Good to see you here this morning. So how we saw State Street really getting slammed after their results this morning, really a lot of weakness in that report. Is State Street's results a sign of what may be to come from regionals?
Well, State Street, I wouldn't put in the regional camp, of course. More of a custody and asset administration type of business. But yeah, they do have deposits, and what has kind of been the universal theme here is deposit outflows from banks, bank deposits finding higher yields elsewhere in money market funds and treasuries and the like. So I think the trend is pretty clear here. Banks do have a deposit conundrum with the assets, deposits rather leaving the system. And that's, a marked difference from 2 years ago during the pandemic when banks were flush with deposits. They didn't know what to do with them. They couldn't lend them out. They didn't really want them. So I think, a challenging couple of quarters here for any banks really that are in the deposit gathering space.
Can they find any reprieve in their wealth management business?
Well, sure, assuming that valuations on fixed income and equities hold up. Those have been, of course, down year over year, but wealth management has generally been pretty stable. Assets have remained at banks, and some banks have had pretty good job of retaining those assets across a cycle. Morgan Stanley, for example, which is coming up to report here this week, is one of them, I think, on the large bank side. And yeah, it's a nice, steady, source of revenue for these banks, and tends to be a bit stickier even than deposits.
Stephen, are investors right to come away with the view from some of these early bank results that the banking crisis in March is just over?
Well, that could be one take. We are surprised at the extent of the outperformance relative to expectations, and of course, the consensus did move down right ahead of the quarter, so perhaps overly optimistic. But yeah, I think the theme here, the takeaway really is that Silicon Valley, Signature, these banks had a very unique business model, and both of which were very much, interrupted in the quarter, and they had to do, had to have some bailouts and have some failures there. But that is not the regional bank industry at large. So yeah, I do think that it was overhyped a bit, and cooler heads will prevail here. And frankly, there's a number of pretty strong valuation stories now across the regional bank universe.
Do you still believe that there is more fallout to come from that banking turmoil? CEO Jamie Dimon is, and to be fair, a lot of the, at least, consumer mindset has abated from the talk or the discourse around the banks in crisis mode, but still a lingering question of what the ramifications or what the byproducts for years to come could look like.
Yes, well, Jamie Dimon's comments were around the fact that you could count the number of these type of situations on your hands, so 10 or less type of Silicon Valley situation. So yeah, are we immune from further failures? I wouldn't go as far to say that, but look, there's been a lot of forensic uncovering here of things like uninsured deposit levels at banks, available for sale, held to maturity portfolios. We run screens ourselves on this to get a comfort level, just at large with banks, to make sure that that indeed Silicon Valley was very much an outlier when it comes to the types of things that they had to do. The three areas I would highlight, clearly had a massive number of uninsured depositors that were flighty, as it turns out. They were also subprime to the extent that they were winding down deposits that they had accumulated during a venture capital stage. And third, they about tripled their deposits in the 20 and 21 surge, and invested them exactly the wrong time in longer dated securities. So had a interest rate risk management problem. That's not your typical bank, to say the least. So yeah, I'm not just prepared to say it's completely over, but certainly the forensics have indicated I think we found the problem institutions and moved beyond.
Argus Research's Stephen Biggar, thank you so much for joining us here this morning. Appreciate it.